decorating for Christmas in about 2 weeks.
Right. I'm surprised you haven't already started, Chuck.
I got the boxes out.
Yeah,
I'm kind
makes
of
sense.
eyeing the situation and seeing, how things look. But we're still in the planning phase for this year.
Home Depot's had 20-foot skeletons out since July 4th, so...
I will say
July
I was I popped by the grocery store yesterday, and you walk in and the Halloween candy is just front and center right now.
That's been out for 3 weeks now. 3 weeks.
Times.
I guess I just wasn't paying attention before, but I saw yesterday. I'm like, it's. I actually don't think last week in August is that early for it. Maybe I'm just skewed by how bad everything's gotten now, but I kind of sit there and I go, it's almost September.
It's
October's
just one of
gonna be
these
here
things
before
that
you
I'm going to
know it.
stop complaining about because we're not going to change it, right? The Christmas stuff will be out before Thanksgiving. There is no real Thanksgiving stuff other than turkeys. I guess you can put those out as early as you want. They're all frozen, but yeah, it's just going to continue to creep, and there's nothing we can do about it. So I'm just going to accept it.
Right next to the Halloween stuff, it was Happy Year 3000 right out there. So
Right.
we're it's
Yeah.
We're looking forward to the next millennium at this point. It's fine. Let's talk a little bit about the upcoming week. Last week, for all of the fireworks on Friday, I do like to point out that the S&P 500 finished
Up
the week
0.5%.
right. It's why did we even get dressed? What was the point of all this? It was okay. So we had 5 days where the market slid down, and then it recouped all those losses in a single day, which meant that, quite honestly, as I feel often about myself, I didn't really need to be there. I could have been doing something else and it would have been fine. In any case, we're here this week and, everyone was all hyped up for Jackson Hole, which is interesting because the Fed never actually does anything at Jackson Hole. They just talk.
They talk about their policy framework
Yes.
and other things.
So
So
they never actually go and raise or lower interest rates or change anything.
Why do we get so hyped up about Jackson Hole? Is it just because it's pretty? They literally report on it for weeks ahead of time.
No, because, look, it is pretty, but, we don't really, Davos doesn't get the same excitement, and Davos looks way nicer than Jackson Hole.
That's fair.
It's just the snow on the trees and everything. Jackson
sure.
Hole, beautiful country. I've been out there once, actually. And the wild thing is it actually is a hole. Have you ever been there?
No.
It's just these mountains that surround it on 3.5 sides, and it's just this hole in the ground. The interesting thing, the one time I was out there, I was at the top of the ski mountain, and it's kind of wild because you see planes landing below you because the airport's in the valley, and I've never seen planes land below me before that. And I'm looking at it and I'm going, oh, that doesn't look good. You shouldn't do it like that, because you've just never seen them from above.
Yeah.
But I digress. This week, we've got 2 market-moving events, actually. We've got Nvidia earnings on Wednesday, and then we've got PCE data coming out on Friday. The more likely to be the market-moving event is Nvidia on Wednesday, just because it's more unpredictable. At this point, quite honestly, markets have gotten really good at predicting PCE because of the pass-throughs from CPI and PPI, and so it's rare to have a PCE surprise, whereas Nvidia, I think there are a few really interesting questions that are out there. The number one question being, is anyone from China actually buying your chips now that they are allowed to do so? And to toot our own horn, which we do love to do here, after the Trump administration reauthorized the selling of this, I said the funniest thing that could happen would be if China says, no, we're not interested. And that's exactly what they're saying right now.
Supporting evidence of this. These would be the H20 chips that they are able to sell.
I like to call it the H2O.
To China. And there's been reporting that Nvidia has ordered suppliers to halt the production of those H20 chips from China after a seeming lack of demand. Now, obviously pretty early, and I don't know how much the CEO is even going to address it because it is so recent in terms of information that I think the only thing he can say is we're just not sure at this stage. But he'll be asked most certainly about production halts on these H20s, and will certainly be asked about his outlook on China. And I'm not sure how investors digest that.
Yeah, so I think that's going to be an open question there. Obviously, the other piece that I've been wondering about is you see all of these, what are called the hyperscalers, the guys who are just buying tens of thousands of these chips. You've seen them upping their CapEx estimates for next year.
Yep.
And the assumption that goes in this is that, hey, that means they're upping the number of chips that they're buying. What if it's just getting more expensive to build this stuff? Is a thought that went through my head.
The main thing that's been going through my head, Chuck, is to this point, when it comes to artificial intelligence and the ramp up of companies like Nvidia, it's largely been a cash transfer from the biggest tech companies out there over to another tech company. I can't look at all of this and say, oh, look at all this wealth creation and productivity creation that's come from the use of artificial intelligence and the development of these chips. It's largely been Microsoft and Facebook, Apple to some extent, but not much, had a huge amount of cash. They continue to create more and more cash, and they finally found something to spend it on that they think is going to be productive in the future, but hasn't been yet. And so when does that massive transfer of wealth, which is not wealth transfer, but massive transfer of balance sheet cash from these tech behemoths actually produce something profitable? And plenty of people would argue with me about this. I think you can point to Meta, for instance, because they have talked at length about how much AI is revolutionizing their business. I just would push back on that a little bit. I just don't think that we have seen it all that much yet from any of these folks. And so that's my main question about all of this is, yes, Nvidia has turned into this first or second largest company in the world based on which day you measure it. But have we actually seen anything other than a transfer from one place to another?
Here's the thing. There's going to be a ton of growth in AI spending, and it's going to do some really cool things. I have no doubt about that. The question is, given the projected spend on an annual basis in order to actually build these data centers, at what point does this start to become problematic for the company's financials? And
Which companies? The spending companies.
The guys building the data centers.
Yeah.
And I went through this last week. There's a guy by the name of Harris Kupperman who published this last week. So this is not an original thought of mine, but it kind of put some firm numbers that are out there, which are, look, right now, next year, in 2026, you are going to have $400 billion of data centers built by these companies. On average, the depreciation for those is going to happen over a 10-year period. The chips might be 3 to 5 years. The facility might be 20. Average it's 10 years in terms of depreciation, which means that, look, those things get obsolete and you have to replace them. Like, there's a cost associated with doing so is basically what it is. So if you've got $400 billion that's being built next year, it means you got $40 billion in depreciation that you got to account for. Okay? In order to actually get the money to cover just the depreciation cost, not to actually make any money, but just to cover the depreciation cost, you now need $40 billion in margin in order to do so. Well, look, based on what we see from these companies, you probably need $160 billion in revenue in order to just cover the depreciation from next year.
Right.
What happens when you get the year after and you've got another, $48 billion? Now you got like $90 billion in depreciation that you need to cover, and you need, $1.5 trillion in revenue in order to do so. You're not going to get that from AI. And so at some point...
Not immediately.
No, Michael.
Ever.
Michael.
Yeah,
Michael.
Ever.
Michael.
It's a lot of money.
$1.5 trillion. To put this in perspective, that is more... you do the math on this, and you say, okay, show me the revenue from all of these hyperscalers right now. And again, I'm just talking revenue. I'm not talking anything crazy here. I'm just talking overall total revenue. Microsoft does $281 billion in revenue right now. Meta does $178 billion in revenue right now. Even if I toss in Apple and...
You have to toss in Google.
Even if I toss in Google and even if I toss in Amazon, I think those are the only ones that are playing at this scale. If you look at the total revenue from all of those companies, it's like $1.7 trillion. So we're not going to get $1.5 trillion in revenue from AI on a short enough time frame to, 15 years from now, okay, that doesn't really do anyone any good.
Yeah.
So the point that Kupperman makes is not that AI is going to be useless. He thinks it's going to be really useful. But that the cost of this development ultimately is probably not going to be supported by the revenues it generates quickly enough. And
Which is just so reminiscent of the dot-com bubble.
And this is what he brings up is, look, you had these companies that were like laying all of the fiber optic cable and building all of the back end. They went out of business.
Yeah.
Now, Microsoft's not going to go out of business. I'm not suggesting that. But they went out of business. We're still using the fiber today that they laid 25 years ago. And the internet is hugely productive. We can do all kinds of immense productivity improving things, including using AI.
All sorts of companies that couldn't have existed without it. Uber, Amazon in its current state. None of these could have existed today without the advent of that groundwork.
But who today looks at their Global Crossing stock and says, I'm glad that I owned that? None of us, because they went out of business, even though they were laying all the fiber that we use to do everything. You couldn't listen to our show right now without the fiber that Global Crossing laid.
Yeah.
And so this is the stuff that I look at, which is, hey, it's not that Microsoft's going to go out of business. There's too much else going on there. But at some point, investors are going to look at this and say, hey, where's the beef? And you can't come back and be like, Beyond Meat. Let's take a quick break. When we return, let's talk a little bit more about what Jerome Powell and the gang said on Friday.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Subscribe to our page and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. When it comes to legacy planning, having a will is important, but it may not be enough. A will only covers probate assets, and the probate process can be slow, public, and expensive. That's where trusts come in. Trusts can help you avoid probate, keep your wishes private, and control how and when your assets are distributed. Whether you're looking to support family, minimize taxes, or prepare for the unexpected, a well-designed plan can make a meaningful difference. Our new free guide, Leaving a Lasting Legacy, covers wills, trusts, and other strategies to help you build a strong retirement plan. Take the first step towards clarity by calling 800-393-4001 right now and asking for your free guide today. That number again is 800-393-4001 or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. A trust isn't just a document. It's a powerful tool that can help protect your assets from the nursing home and even reduce or eliminate estate taxes. Cushing & Dolan are leaders in elder law, estate planning, and asset protection. This month, they're offering a free guide called Demystifying the Top 7 Estate Planning Trusts. This guide breaks down the most common types of trusts, explains the pros and cons of each, and helps you understand which might be right for you and your family. Trusts come with different rules, benefits, and tax treatment, and choosing the wrong one could cost you. Learning the differences now can help you make smarter decisions for your future and your loved ones. Trusts are a critical part of any well-designed estate plan, but they can be complex. Don't guess your way through it. Get the facts first. Call Cushing & Dolan now at 866-848-5699 to request your free copy, or visit LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The holidays are just around the corner, so now's the time to plan your winter escape. Trade in the cold for sunshine, sea breezes, and island vibes in the U.S. Virgin Islands, America's Caribbean paradise. Whether it's a romantic retreat, a family celebration, or a solo recharge before the new year, St. Croix, St. Thomas, and St. John offer the ultimate warm weather getaway. Lounge on sun-drenched beaches, explore vibrant culture, and celebrate the holidays island style. No passport, no hassle, just warm weather, clear blue water, and unforgettable memories. This is where the stress melts away and you find yourself naturally in rhythm with the heartbeat of the islands. Go to visitusvi.com and book your trip today. That's visitusvi.com. The U.S. Virgin Islands, America's Caribbean paradise. Your holiday escape starts here at visitusvi.com.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Breaking business news as it happens, only here on the Financial Exchange Radio Network.
This unusual situation suggests that downside risks to employment are rising. And if those risks materialize, they can do so quickly in the form of sharply higher layoffs and rising unemployment.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts, and now's the perfect time to register for this year's 5K at Castle Island by visiting dav5k.boston. The event will sell out again, so if you're interested in participating, now's the time to reserve your spot. Come out and help support our great American heroes by joining us for the DAV 5K. Visit dav5k.boston to register or to make a donation today. That's dav5k.boston.
So, Mike, on Friday, Powell clearly took a dovish tack. I know that the funny thing, and this has been pointed out by a few people, if you fed Powell's speech into large language models, they said he was being hawkish, but every human was like, no, this is dovish as heck. This is not what we're doing here. Like, just Bloomberg's own LLM spit out like, oh, this is hawkish. You plug this into a bunch of them, it's like, this is hawkish, but actual humans looked at it and went, hey, this is really dovish. And
okay, does that say something about our bias or crappy large language models?
Both.
Yeah.
Okay, I don't know exactly what, but it says something about both, certainly.
Okay. Yep.
In any case, the key line and the takeaway, and this is here's why I thought Jay Powell was dovish. I don't care about the Fed's, policy framework and everything. I do, but not insofar as, hey, what does it mean for things today? For things today, it's very simple. Nonetheless, with policy in restrictive territory, the baseline outlook and shifting balance of risks may warrant adjusting our policy stance. Hard stop.
Yeah, nothing else really.
It's Powell saying, look, I think we're a little bit restrictive now. As such, given the data, we might need to adjust that. Full stop. Everything else is noise. It's Tucker, is it Game of Thrones where, he makes the line like everything before the butt is BS?
Couldn't tell you. I don't know.
It's some show or movie where they say that. It's like, look, if you hear the word butt in a sentence, everything before the butt, you can basically get rid of. This was, hey, everything before the nonetheless, forget about it.
It was Game of Thrones.
Thank you.
So let's put this in context once again. 12 voting members.
Yes.
2 of them have felt this way for the last couple of meetings, it seems. 10 of them have not.
Jay's trying to build consensus.
Yeah.
Jay's trying to build consensus towards that. And which, by the way, is completely justifiable. I said going into Friday, you could look at the Fed's dual mandate, stable prices, maximum employment, and you could say both sides of those are being threatened right now. If you want to prioritize one set over the other because you think one is the more immediate threat, I think it could be justified in going in either direction, quite honestly. It's just, I'm pretty much saying, look, this is a toss-up. And you're not going to know until later whether or not you're right on it.
Yeah, so that's, I guess, my main question is if... Clearly, Jay Powell doesn't think it's a toss-up if he's making this kind of statement. And clearly, others on the Federal Reserve also don't think it's a toss-up. They are favoring the employment side based on these comments.
Sure.
But if I think it's a toss-up, I'm doing nothing. And they are seemingly concluding something different than what you are, which is they don't think it's a toss-up. Jay Powell seems to think or at least our interpretation and most investors' interpretations of Jay Powell's speech were that they are now more worried about the employment side. And again, to speak to what this contextually means is that Jay Powell is worried more about a recession right now than he is about the economy heating up to the point of inflation, which is, not capitulating to the president, I would say, is what you're talking about here. And I bring that up because another piece wrote about it that way, which is, no, I think they are genuinely concerned about growth in this economy, the poor job market data that came out over the course of the spring. And they are now saying, look, our job is to stabilize that and maintain the stability. And so we think we might need to cut.
Look, we've talked a lot about Fed independence here on this show. Anyone who looks at the data in the aggregate and says, hey, this is the Fed doing what the president wants, I don't think that's an accurate read.
Sure.
There is convincing data that the labor market is slowing meaningfully and could become problematic in the next 3 to 5 months. There's also some convincing data that inflation is starting to pop up back in some places that we haven't seen it in a little bit, and that could become a problem in 3 to 5 months. The Fed is weighing this, and maybe it's 60-40 or 70-30, but they're saying, hey, there's more concern on the employment side here for us. And that's something that is bothersome. I think that's a completely reasonable take for them to have at this point. And I think it's also reasonable that they didn't necessarily do anything over the last few months yet. The other thing that I'll point out on this, for all of the talk about, hey, was this speech this or that? They ain't done anything yet.
True.
Okay? If the data comes in really hot the next 3 weeks, we get a hot jobs report and hot CPI, they're probably not cutting in September. If we get a month of job loss and CPI is muted, they might go 50 basis points in September.
I know we got to go to Wall Street Watch. I do want to continue this conversation because I want to get into how they might be wrong. Quick break. Wall Street Watch is next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Sometimes we know it's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a new guide available this month titled Leaving a Lasting Legacy. Mike, when it comes to naming beneficiaries on different accounts, what's the thought process that people should be starting with?
Well, first and foremost would be probably you want to do it. I know that seems so basic, but Chuck, I mean, how frequently do we run into this where forget about your investment accounts. Usually those are getting looked at. Your 401k, it's one of the first things you get asked. But I run into people every day that don't realize they can have beneficiary designations on bank accounts, for instance. And what an easy way to avoid frustration after you're gone.
Can you talk a little bit about how much time and effort that can save someone after a loved one passes away when it comes to being able to inherit assets quickly?
Anyone that's been through probate will know the answer to this, but these things can last a year, and it doesn't matter if it's a $5 million estate. Obviously, that's pretty complicated, but a $10,000 checking account could also need to go through probate, and it could take an equal amount of time depending on the complexities involved. And so there are a lot of benefits that are out there when it comes to just utilizing the tools that are made available to you, and beneficiaries is a big one.
Folks, the guide is titled Leaving a Lasting Legacy, and the way to request it is by calling 800-393-4001. Again, the guide is titled Leaving a Lasting Legacy. It discusses beneficiary designations and a whole lot more. And the way to request it again is by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
After a Fed-fueled rally on Friday, markets beginning the week in mixed territory as Wall Street awaits pivotal Nvidia earnings on Wednesday after the bell, in addition to an inflation reading on Friday when the core PCE index is unveiled. At the moment, the Dow is off by 0.4% or 187 points lower. S&P 500 is down nearly 0.2%. NASDAQ edging 11 points higher. Russell 2000 is off by 0.25%. 10-year Treasury yield up 3 basis points, now at 4.293%. And crude oil up 1.5% higher, trading at $64.59 a barrel. Big acquisition news in the beverage space this morning after Keurig Dr. Pepper agreed to purchase the owner of Peet's Coffee, JDE Peet's, for $18 billion. Once the acquisition completes, the combined company is set to separate into two independent U.S.-listed coffee and beverage firms. Keurig Dr. Pepper shares dropping 7%, while JDE Peet's stock is jumping 18%. Meanwhile, Intel stock is up over 1% on the heels of confirmation that the U.S. government has taken a 10% stake in the struggling chip maker. Elsewhere, furniture stocks taking a hit following comments from President Trump that his administration would launch an investigation into imported units. Williams-Sonoma down by over 2%, Wayfair tumbling 7%, and RH shares are falling by 6%. According to Bloomberg, Thoma Bravo nearing a deal to acquire call center software maker Verint Systems, which would value Verint at about $2 billion, including debt. And shares in American Eagle Outfitters pulling back 3% after Bank of America downgraded the stock to underperform. The analyst noted that while the retailer's Sydney Sweeney ad campaign may boost sales in the near term, the momentum will be sapped by tariffs. I'm Tucker Silva, and that is Wall Street Watch.
Mike, you mentioned that you wanted to talk about the Fed and kind of what Jay Powell said on Friday in the context of, was it how will we know if they're wrong, or what could make them wrong?
Make them wrong? Yeah, so I want to start with the job market data in the spring turned out to be really weak, and no context needed. It was really quite bad, and in any normal environment would probably indicate, if it continued, a recession, right? I mean, we had basically no job creation for 3 months. Is that a fair statement?
In the spring?
April, May, June time frame is when we had like the 25,000, or was it May, June, July?
Either way, we're splitting hairs. Continue.
The Fed, I think, is right to take a look at that and say, wow, that is an indication of something really not that great. On the other hand, I know that they are well aware of this.
May, June, July.
May, June, July. Okay. I thought it was April, May, June. It was May, June, July. The other side of the context of all this would be we are currently seeing, and have been for a while, but currently seeing a massive number of baby boomers retire every single month, combined with one of the largest changes in net migration in a short time period. Actually, probably the largest change in net migration to this country that we have ever seen. And so,
at least in the negative sense.
Right. Well, I mean, from where we started in 2023 to where we are now. Yeah.
I guess where I'm going is like 23 was a huge acceleration over where it was previously. This is probably the biggest deceleration.
Yes.
In migration on a net basis at any point in time.
For some estimates of this, just so everybody understands how severe this is, during the 2010s decade, we averaged about 917,000 people entering the country on average annually. In 2023, that was 3.3 million, and in 2024, an estimated 2.7 million.
Yep.
For 2025, we're estimated to see net outmigration of 205,000.
Correct. And so
how do you judge a labor market that is,
and this is the tough
seeing
part,
these things, right? Like I don't know how anyone, no matter how well trained you are, and no matter how much great data you think you have, can contextualize what that does to a labor market when you see that degree of change in migration.
And here's how you have to think about this in terms of what it means for the labor market. There are a couple things that I think we need to work through on this, because economics is hard, is what I come back to.
Yeah.
Here's the first piece. The first thing that I always like to kind of reset is when we talk about the number of jobs added each month, you're better off not looking at the number of jobs and better off looking at you're better off not looking at the number of jobs added and better off looking at the total number. It makes things cleaner. If you're saying, hey, on average, there's revisions of 70,000 jobs each month, and you normally see like 140,000 jobs added, you're like, well, there's a 50% error on that. The fact is, what the DOL is trying to measure through the BLS is not how many jobs are added each month, but just the total number of people that are working.
So from that degree, they're pretty close.
So a 70,000 person error on 150 million jobs is actually pretty darn close, number one. The second piece is there's a reason why, like for all of the talk about the jobs revision and this and that, there's a reason why the Fed doesn't focus on the number of jobs created. And the reason why is because the Fed cannot create people. Jay Powell can have kids, but
he cannot create enough people to make it statistically different.
That is separate from his duties at the Fed.
Hell, even Elon Musk can't create enough kids to have a statistical difference.
Okay, that is separate from Jay Powell's duties at the Fed as to whether or not he has 1, 3, 5, or 100 million kids. Okay, completely separate. What I mean by this is, let's say that you have a labor market that has 100 people in it, and 96 of them have jobs. You got a 4% unemployment rate, and the Fed says, hey, this is great, unemployment's low. If one of the unemployed people leaves the country, just is gone, and now you have 96 people working out of 99, did the labor market get better or worse? Hold that thought. I don't want an answer yet. Now let's say that one of the employed people left, and now you have 95 people employed out of 99. Because you lost one job, does that mean the labor market got worse? Well, no, you still have an unemployment rate of 4%. You just have one fewer person. Maybe that person died or whatever. Other side of the equation. Let's say that you add a person and they get a job. So now you've got 97 people employed out of 101. Does the Fed need to hike because you added one job that month? Or is it just the unemployment rate is stable? And this is why the Fed targets unemployment, is because they can't affect migrations or births or the labor force. The Fed cannot do that. They just can't. And so the Fed focuses on the unemployment rate, which does make it interesting that they're talking about cutting here, because if there's one thing that the unemployment rate has done this year, it's nothing.
Right. It's been very stable.
The unemployment
between 4.1 and actually between 4.1.5 and 4.2.5, basically.
The unemployment rate right now is at 4.2%. The unemployment rate a year ago was at 4.2%.
And it hasn't gotten over 4.3, I think?
Correct. Now, the interesting thing is that if the labor force participation rate were the same as it was earlier in this year, the unemployment rate would be 4.9. It would have gone up by over 0.5%. So, there are a couple ways you can look at this. Number one, maybe the Fed thinks that that is not a long-term shift and that the labor force participation rate is going to go back to where it was, in which case the unemployment rate is going to rise just by virtue of that, and they want to get ahead of that.
Yep.
Kind of a reasonable case, but in the context of a bunch of boomers retiring, not enough Gen Zers coming into the workforce to replace them, and a net outflow potentially of immigration, I don't know how plausible that is. So that's I think this is what you were getting at in terms of the potential wrong path for the Fed is, hey, maybe they're trying to view something as transitory that isn't, and they think the labor market's weaker than it is because of that.
Yeah.
It's not transitory inflation that they're thinking. It's they're thinking, hey, the shift in the labor force is transitory, and we want to get ahead of that. And maybe the problem is if they're wrong and we have lower labor supply, then businesses, even with less demand, still have to compete for that lower labor supply, and that drives wages up.
Yeah. My concern would be that the weakness that we saw in May, June, July was primarily caused by policy uncertainty from the White House, which there was plenty of. Go roll the tape. And
we don't use tape anymore.
May be about, that was that whole internet conversation we had earlier.
Yeah.
We may be on the cusp of a hiring boom that we just aren't seeing yet, and it could be occurring into a supply of labor that is diminishing.
The counterpoint to this, and again, this is why I think it's totally reasonable to have any view at this point as to what you think the Fed should be doing. The counterpoint to this is that in the last 4 weeks, weekly unemployment claims have gone from 217,000 to 235 and are starting to show signs of ratcheting back up.
Yep.
And so maybe the Fed should be cutting.
Yep.
I don't think it's unreasonable to either say the Fed should be cutting, doing nothing, or hiking at this point.
Right.
Now, ultimately, whether you're good Fed or bad Fed is going to depend on you getting that right. And I don't know enough looking at the data to be right. That's how it is. I think there's a reasonable case for all three. If you told me end of this year, unemployment's going to be 4.7 and inflation's going to be 2.5, reasonable view. If you told me unemployment's going to be 3.9 and inflation's going to be 3.8, reasonable view. If you told me somewhere in the middle, hey, unemployment's still 4.2 and inflation's 3.3, yeah, that's reasonable too. I don't think any of these are off the table. And that's what makes this point in time so hard, and also why I think the Fed is perfectly justified in doing what they're doing if they have information that they believe, hey, labor is the bigger threat right now. Let's take a quick break here. When we come back, should we talk about businesses bringing back recession specials?
Yes.
Oh, can't wait to do that right after this.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
A trust isn't just a document. It's a powerful tool that can help protect your assets from the nursing home and even reduce or eliminate estate taxes. Cushing & Dolan are leaders in elder law, estate planning, and asset protection. This month, they're offering a free guide called Demystifying the Top 7 Estate Planning Trusts. This guide breaks down the most common types of trusts, explains the pros and cons of each, and helps you understand which might be right for you and your family. Trusts come with different rules, benefits, and tax treatment, and choosing the wrong one could cost you. Learning the differences now can help you make smarter decisions for your future and your loved ones. Trusts are a critical part of any well-designed estate plan, but they can be complex. Don't guess your way through it. Get the facts first. Call Cushing & Dolan now at 866-848-5699 to request your free copy, or visit LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. When it comes to legacy planning, having a will is important, but it may not be enough. A will only covers probate assets, and the probate process can be slow, public, and expensive. That's where trusts come in. Trusts can help you avoid probate, keep your wishes private, and control how and when your assets are distributed. Whether you're looking to support family, minimize taxes, or prepare for the unexpected, a well-designed plan can make a meaningful difference. Our new free guide, Leaving a Lasting Legacy, covers wills, trusts, and other strategies to help you build a strong retirement plan. Take the first step towards clarity by calling 800-393-4001 right now and asking for your free guide today. That number again is 800-393-4001, or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Business and financial news affecting the markets and your wallet. We've got it all straight from Wall Street, right here on the Financial Exchange Radio Network.
Piece in CNBC today. Businesses are bringing back recession specials. Apparently, this is popping up all through Google search now, and I don't know that this actually means anything.
Yeah, why are we so obsessed with the word
because we don't know what it actually means.
Yeah.
Here's the thing about recessions. When you actually go through one, they suck. you don't have specials during them. You see business closures, you see firings, you see stuff like that. Not, hey, the New York coffee shop Clever Blend having a $6 gelato and espresso recession special. Like you don't make jokes about recession when you're actually in one. I think is where I would land.
Right.
Because they suck, and your friends get laid off, and your family, gets nervous about how are we going to pay the bills. And I know this is stuff that a lot of Americans have been feeling for the last few years anyways, but it's different in recession. And I think that when you actually enter recession, this stuff goes away because people are too busy trying to figure out how to survive.
Not the deals, just the obsession with the idea of the deals.
Yes.
Like, yeah, when recession happens, yes, certainly all sorts of things go on sale and businesses have to run promotions and cut into their profit margins.
They're too busy to be funny.
Demand. It's just not terribly humorous at the time.
It's
kind of funny, like 10 years after it. Sometimes, not for the person that lost their job, but like some of the things that you look at back then, like Mike buying his first home in 2011 for like $2 and a paperclip, like that. Yeah, that part is a little bit funny in context, but not the guy who lost his job and lost his home back in 2011.
I'm a big believer that comedians often have some of like the best insights on this stuff, and I keep going back on this story to I think it was Chris Rock's first CD.
Okay,
and he goes,
"How much of this can you actually say on air?" Go ahead.
Probably this is it. He goes, look, if a homeless person has a funny sign, he hasn't been homeless too long. Long-term homeless people are too hungry to be funny, is the point that he makes. It's kind of the same thing with these recession deals.
Yeah.
If your business is really struggling, you don't write recession deal. You're just marking stuff down and laying people off because you got to survive. And so, yeah, I think that's kind of the situation here.
A trust isn't just a document, it's a powerful tool that can help protect your assets from the nursing home and even reduce or eliminate estate taxes. Cushing & Dolan are leaders in elder law, estate planning, and asset protection, and this month they're offering a free guide called Demystifying the Top 7 Estate Planning Trusts. This guide breaks down the most common types of trusts, explains the pros and cons of each, and helps you understand which might be right for you and your family. Trusts come with different rules, benefits, and tax treatment, and choosing the wrong one could cost you. Learning the differences now can help you make smarter decisions for your future and for your loved ones. Trusts are a critical part of any well-designed estate plan, but they can be complex. Don't guess your way through it. Get the facts first by calling Cushing & Dolan at 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
BJ's Wholesale Club reported earnings, and this was on Friday. Their shares fell about 8% on the news. Big thing is that their same-store sales climbed by 2.3%, excluding gas sales, but that was below the 3.2% increase that was expected. And so, ultimately, they ended up reaffirming their guidance for the rest of the year, but just not enough there. This is a company, look, I'm a member myself. I buy basically all my groceries there because my daughters eat through more fruit than is humanly possible. But ultimately, you can only buy so many raspberries in a week, and, I'm doing my part.
My question for you, Chuck, BJ's problem or consumer problem? You've shopped at both Costco and BJ's. Do you notice a demographic difference between the two? I'm just wondering, like, these are two very comparable companies that do business in each other's backyards.
Costco tends to target a higher income consumer a little bit, so maybe there's something there on that front. But
I just, the temptation is always with, like, for instance, if you looked at Target and Walmart 10 years ago, you would look at the two of them and say, okay, both are pretty good indicators of what the consumer economy is doing. 2025, you're looking at them saying, okay, Walmart has executed perfectly on most things. Target has executed horrendously on most things, and so not exactly a good read. And that's kind of my question is, are we faced with a BJ's Wholesale Club that is not executing in the same way as its competitors, or is it an indication that, hey, consumers are struggling and pulling back? I don't have an answer yet.
It's hard to tell. Costco typically targets a little bit more upmarket, but like the pricing and selection is pretty comparable across them. So I look at it and I go, I don't really know what to make of this. I get the biggest thing. BJ's is a lot smaller. Like they don't have the economies of scale that Costco can get to, and so they might have some levers that they can't pull just because they're not available to them. Let's take a quick break here, but we got hour 2 coming up in just a little bit.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
This is the Money Matters Radio Network. WBNW 1120 AM and W275CM FM. Concord, Boston. The Money Matters Radio Network.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
The holidays are just around the corner, so now's the time to plan your winter escape. Trade in the cold for sunshine, sea breezes, and island vibes in the U.S. Virgin Islands, America's Caribbean paradise. Whether it's a romantic retreat, a family celebration, or a solo recharge before the new year, St. Croix, St. Thomas, and St. John offer the ultimate warm weather getaway. Lounge on sun-drenched beaches, explore vibrant culture, and celebrate the holidays island style. No passport, no hassle, just warm weather, clear blue water, and unforgettable memories. This is where the stress melts away and you find yourself naturally in rhythm with the heartbeat of the islands. Go to visitusvi.com and book your trip today. That's visitusvi.com. The U.S. Virgin Islands, America's Caribbean paradise. Your holiday escape starts here at visitusvi.com.
Hi, this is Chuck Zodda from the Armstrong Advisory Group. If you have an IRA, it's critical to understand the tax rules that may affect your family as you plan for retirement. Current law requires most non-spouse beneficiaries to withdraw the full balance of an inherited IRA within 10 years, which may lead to higher taxes and reduced value over time. If beneficiary designations are outdated or incorrect, they could possibly override your will and change how your assets are distributed. That's why we're offering a new guide called Leaving a Lasting Legacy, a resource to help you better understand inherited IRAs and other legacy planning topics that could affect your future. Make an informed choice and take control of your plan. Call 800-393-4001 and ask for your free guide today. That's 800-393-4001 or request your copy online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about your new guide, Todd, Demystifying the Top 7 Estate Planning Trusts. Now, do you lose control if you transfer your assets to an irrevocable trust in order to protect them from long-term care expenses?
Well, you know, that's great when you mention that irrevocable trust, but limit it to the kind of trust where you're protecting it from the cost of long-term care. Because as the guide says, there's 7 different kinds of trusts that we're trying to demystify. And there's also many kinds of irrevocable trusts out there, not just one type. So many people think there's just one type. But this particular type, where you're trying to protect it from the cost of long-term care expenses, the answer is no. You do not lose control over your assets. There's a whole spectrum of control with irrevocable trusts. And this one, you keep about 95% control. Like, you can live in your house, you can sell your house, you can buy another house, you can invest your money, you can manage your money, you can collect the income. Even the tax liability of these trusts are designed to be at your own rate. In other words, they are grantor trusts. You don't even pay any higher income taxes when you have this irrevocable trust. So this kind of trust, folks, you keep control and you protect your assets from the cost of long-term care.
Call right now for your free copy of Cushing & Dolan's comprehensive guide titled Demystifying the Top 7 Estate Planning Trusts. It will help you determine what type of trust is right for you and your family. Call 866-848-5699. That's 866-848-5699. Or you can request it from LegalExchangeShow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated.
This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, and Tucker with you, and we got markets not really doing too much of anything. The Dow is technically off 0.5%, but that's basically because a handful of components, like 5 out of the 30, are down 1.25% or more. Whereas when you look at the S&P 500, which has 500 companies, actually not quite, a little bit more than that right now, that's only off 0.1%, and the NASDAQ Composite's up 0.25%. So not really too much going on that suggests any major deviation from equity markets as to, kind of where we finished Friday. When we take a look at the bond market, a little bit of an upward move in yields. 10-year Treasury up 2.9 basis points to 4.287%. Still not anything meaningful and not giving back all of Friday's gains on bonds. So ultimately a little bit of a shift, but I'm not really sure that there's too much meat on that bone. When we take a look at commodity markets, oil, West Texas Intermediate, up 99 cents a barrel to 64.65. And we've got gold up 70 cents an ounce. Wow. Glad we got out of bed for that one at 34.19 and 20 cents. So markets pretty quiet today. Quite honestly, last week, they were pretty quiet overall. It's just you had, about a 1.5% slide heading into Friday, and then markets rallied 1.5%. So it seemed exciting. But ultimately, not too much really happened. It was just, okay, we had to get through the Fed, through Jay Powell, and now we're on to the next thing. Which does bring us to, I think, a great topic here. Tech rally shows signs of losing steam. Well, forgive me if I've heard this about a dozen times in the last 2.5 years, but you got to prove it to me. And I'm not saying that there haven't been times where tech's underperformed. The second half of last year and Q1 of this year, tech did underperform. Yep. But ultimately, that was a relative consolidation that tech went through, and it bounced back with an absolutely ridiculous last 3-4 months here since the second half of April. So I think that when I hear about, the tech rally showing signs of losing steam, we might be seeing it in the stocks and in kind of the pricing movement. For me to really believe that tech is going to lose steam, you've got to actually see it in the numbers, in the earnings, in the revenue, in the CapEx. Right. And that's something that we just haven't seen yet. And at some point you're going to, because we're not going to become the United States of Amazon or the United States of Microsoft.
God, I hope not.
It's not going to be, that thing. But I just look at this and I hesitate to call top in tech just because, A, I don't think I'm qualified to do so, but B, okay, like if we've played this game, 10 times in the last couple of years, it's been a pretty losing-y game to be playing.
Yeah, shorting tech anytime over the last,
2.5 years.
2.5, but take a longer-term outlook on this. Since the dot-com bubble has not been a great proposition.
Tech wasn't what it... I think sometimes we forget that, U.S. tech wasn't what it was until the last few years.
Absolutely. I mean, you go take a look at its composition of the S&P 500 going back to the early 2010s. I think it was less than half of what it is now. So I don't mean to minimize that massive changing factor here.
Well, I think also, let's look at tech. Let's look at this in the context of, okay, show me how tech actually performed relative to the other industries in the S&P 500. We've got 11 different sectors in the S&P, and we kind of have to back into this just because not all of them were, they've kind of moved things around in this and that historically. But if you look at this and say, okay, back in 2010, tech was, depending on the metric that you're looking at, either the 8th or 9th best performing out of them. In 2011, it was the 7th best. In 2012, it was the 8th best. In 2013, it was the 5th. In 2014 and 15, it was the 4th best. In 2016, it was the 7th best. Then he went on this run in 2017, 18, 19, and 20, where it was basically, in those years, just absolutely crushing everything else, aside from 18, where it was basically flat. And then it had a monster 23 as well, and monster 24. So it's really since 2017 that tech has been, kind of what we think of it, and even more recently, like since 23, that it's done, just the crazy stuff that is out there. But it feels like forever, just because like it's been so dominant the last few years. But there's always this rotation that's going on, and some years it's this, some years it's that. I always come back to like the story about emerging markets investments, where if you looked from like 1990 through 2007, EM crushed the S&P 500, demolished it. Like, you had institutional investors being like, why am I invested in U.S. stocks? Like, I wish I could change my mandate somehow because EM's where all the growth is. Well, the last 18 years have been the polar opposite of that. Right. And they don't ring a bell when the regime changes for investments. They don't say, okay, everybody into the pool, Adult Swim. They don't do that. You kind of just have to figure it out. And so I do think it's interesting to have the thought of, hey, what and when, like, what do we have to be aware of in terms of when this run of tech dominance could end? But I also think that trying to jump the gun and being like, hey, we got to get everybody out of tech, let's not go too far on this.
Yep.
Yeah,
especially when people are talking about, that tech rally seems to have really lost steam over the last week and a half. That maybe I hope you have a really good model for why that's going to hold steady.
Yeah, why is that going to matter? Will it matter a week and a half from now?
Right.
Or a decade and a half from now? Because if all you're looking at is like the last 10 days, tech's been a little wobbly. Okay, it looked wobbly for 9 months and then showed up and promptly beat everything down over the last 4 months or so. So I don't know. I don't know that there's too much there, but I don't know. Interesting to see people talking about it. And generally, when this stuff actually matters is when people aren't talking about it. It's kind of what I tend to find. Let's take a quick break here. When we come back, we've got trivia right after this.
The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network. The holidays are just around the corner, so now's the time to plan your winter escape. Trade in the cold for sunshine, sea breezes, and island vibes in the U.S. Virgin Islands, America's Caribbean paradise. Whether it's a romantic retreat, a family celebration, or a solo recharge before the new year, St. Croix, St. Thomas, and St. John offer the ultimate warm weather getaway. Lounge on sun-drenched beaches, explore vibrant culture, and celebrate the holidays island style. No passport, no hassle, just warm weather, clear blue water, and unforgettable memories. This is where the stress melts away and you find yourself naturally in rhythm with the heartbeat of the islands. Go to visitusvi.com and book your trip today. That's visitusvi.com. The U.S. Virgin Islands, America's Caribbean paradise. Your holiday escape starts here at visitusvi.com.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. When it comes to legacy planning, having a will is important, but it may not be enough. A will only covers probate assets, and the probate process can be slow, public, and expensive. That's where trusts come in. Trusts can help you avoid probate, keep your wishes private, and control how and when your assets are distributed. Whether you're looking to support family, minimize taxes, or prepare for the unexpected, a well-designed plan can make a meaningful difference. Our new free guide, Leaving a Lasting Legacy, covers wills, trusts, and and other strategies to help you build a strong retirement plan. Take the first step towards clarity by calling 800-393-4001 right now and asking for your free guide today. That number again is 800-393-4001 or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
A trust isn't just a document. It's a powerful tool that can help protect your assets from the nursing home and even reduce or eliminate estate taxes. Cushing & Dolan are leaders in elder law, estate planning, and asset protection. This month, they're offering a free guide called Demystifying the Top 7 Estate Planning Trusts. This guide breaks down the most common types of trusts, explains the pros and cons of each, and helps you understand which might be right for you and your family. Trusts come with different rules, benefits, and tax treatment, and choosing the wrong one could cost you. Learning the differences now can help you make smarter decisions for your future and your loved ones. Trusts are a critical part of any well-designed estate plan, but they can be complex. Don't guess your way through it. Get the facts first. Call Cushing & Dolan now at 866-848-5699 to request your free copy, or visit LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
Hear the Financial Exchange every day from 11 to noon on SiriusXM's Business Radio Channel 132. Keep it here for the latest business and financial news and the trends on Wall Street. The Financial Exchange is now live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
Time for trivia here on the Financial Exchange. In our final week of World War II trivia, we'll focus on the famous actors and actresses who served our country during the war. So on this Monday, we'll ask you this trivia question. Which member of the Golden Girls was a Marine during World War II? Once again, which member of the Golden Girls was a Marine during World War II? Be the fifth person today to text us at 617-362-1385 with the correct answer, and you win a Financial Exchange Show t-shirt. Once again, the fifth correct response to text us to the number 617-362-1385 will win that t-shirt. See complete contest rules at financialexchangeshow.com.
So on Friday, we received confirmation that Intel is going to agree to allow the U.S. government to take a 10% stake in the company. It's going to be worth about $8.9 billion. This is funding that was already appropriated through the CHIPS Act that was supposed to be in the form of a grant that is now going to be in the form of an equity stake instead. Over the weekend and into today, the Trump administration said they would look to likely take equity stakes in additional companies as they look to, allocate funds. Unclear if that's, specifically in the semiconductor industry or elsewhere. But now the question, I think, is out there. And again, there's a reason why we typically, don't see this in the United States is because you start to wonder if you are operating, whether it's a large publicly traded company or a smaller privately held one, hey, does the government need to have a stake in my business in order for us to be able to operate a certain way or receive funding or whatever it might be.
It's a very open question. I mean, the Pentagon announced a stake in, what was the rare earth company?
So that I thought made a little bit more sense, the MP Materials deal.
I'm with you in terms of it making sense. Like, I get that it's a strategic defense interest.
But it's also that the Pentagon was announcing that they were going to be buying a certain amount of the materials each year and setting a floor for pricing so that you could produce it. The U.S. government, to my knowledge, is not saying we're going to buy Intel chips because what are we going to do with them? Like, it's just, where's the DoD needs that stuff.
Yes.
And so I think for, critical defense things, it's the technical term, I believe, for critical defense products, you can make a case, the DoD probably should be directly involved in making sure that you have a minimum supply of the things that are needed there. For broad-based semiconductors, it's kind of like...
I get that it's a slippery slope argument, Chuck, and I think that's your point. But I think that's the exact argument the Trump administration would make here is this is about the United States securing a critical supply of future semiconductor manufacturing, and we deem that necessary to defense interests, I guess. Again, I don't find the argument compelling, but I think that's the argument they would make.
No, this is a good conversation to have, though. And here's why I think this is different. The market is speaking as it relates to when it comes to rare earth materials. The market spoke this year and said the U.S. needs these and we can't produce these. We heard from all kinds of companies saying, hey, there's a problem if China cuts this off.
Yep.
When it comes to Intel, the market's been speaking in the exact same way. Intel's been making plenty of product.
Yep.
And the market has been saying, no, we're not interested in that.
Yeah.
Like Intel's been trying to run its business, and the market has been saying, you guys are not making stuff at the caliber that you used to, and we are not interested.
Right.
So in my opinion, it's opposite market signals that are being sent. And this is where you get into the problem in both of these cases then, with the U.S. government owning them, is, okay, do you actually get accurate market signals? If Intel, quite honestly, if they should be out of business, but they're kept afloat by the U.S. just because we can't figure out any other way to do this, that's not really how the United States works. We generally let bad businesses die, or we should, and you have new ones that are better that spring up to take their place.
Right.
Intel, by the way, is an example of that. All the company making freaking vacuum tubes and, all the big, computers back in the 60s, Intel came along and said, we've got a better way to do this. And their competitors didn't run to the U.S. government and say, oh, please, please, please give us money so we can stay. No, they had to deal with that because they were selected against by the market. And so if Intel's being selected against by the market, which is what's been happening,
right?
Well, why do we save them? Why? Quite honestly, why don't we? If you want to use U.S. taxpayer money, use it for the stuff that's being selected for by the market.
Yeah. I think there's a very compelling argument that the state of chip manufacturing in the globe right now and the risk of all of it being done, or a critical portion of it being done in Taiwan, is a national security concern. And we could both absolutely envision a scenario where we are facing the exact same scenario as we did with rare earths. Right?
You need to produce this stuff here in the U.S. full stop. The question is,
do you need to have
federal ownership of Intel the way to do that? Because let's say that Intel's been producing sucky products for a decade now. It's how they got to where they are, where they needed this. There's a reason why AMD isn't showing up being like, oh, please take our equity, or Nvidia's not showing up saying, please take our equity. It's because they don't need that. If Intel continues to produce suck over the next 10 years, now that the U.S. government owns a 10% stake, do we just throw more money at the suck because we don't want to lose the equity stake?
Right, I don't know.
These are the questions that come up on this. I got to tell you, once you have, the federal government basically committing to, hey, we're going to fund Intel and all those jobs, generally Congress doesn't like to cut jobs from federal allocations. That's how it usually works. So these are the questions that come up here. And the other thing, look, you might say, look, I think the president can do a great job, in this partnership with Intel. Okay, play out the string. Let's go 5-10 years down the road.
Right. Do you think the next president will be as good a steward of Intel's company as the current one?
If Bernie Sanders Jr. is running the United States government, are you going to be like, yes, this is what I want?
Right.
This
isn't a Donald Trump stake.
No.
This is a U.S. government stake, and typically they don't just go away.
No, and there's a reason why the U.S. has historically shied away from stuff like this.
Yeah.
And it's because it hasn't really worked in the places that have tried it.
Again, I don't want to paint this as a full, complete and total 180. The U.S. government has, on many occasions, made bets on companies. Not through ownership stakes, but on bills supporting specific industries and specific companies. There's been successes there, but there's been failures there. So this is an extension and a pretty broad extension of it. But it leads to a whole bunch of other questions. The biggest one to me is this something we're going to expand upon? Who's next?
It sounds like it.
Right? Like it sounds like the president
it is.
has made statements that he wants to expand this further. And so I think it's a real question as to whether or not this is how we want U.S. taxpayer dollars going, is towards ownership in publicly traded companies, and specifically ownership. What I further wonder is it specifically going towards ownership in public companies that have not done very well,
right?
That we see as strategic national interests.
Sure. I want to talk about a piece from Bloomberg that just popped up on my screen today, look, there's a few other things that we're going to get to here, but there's one that just popped up, and everyone's talking about it. It's about how there are now more ETFs than there are individual stocks in the United States. And you get the people freaking out being like, oh my goodness, this is horrible. Not even realizing, hey, there have been more mutual funds than there are stocks in the U.S. for years now. Mm. And ultimately, I think that the comparison that I found online that's best is, wow, I guess we just found out that there are more recipes than there are ingredients in the world. Yeah,
this isn't a big deal at all.
No, it's not. And someone, made the case, oh, it's so hard to, choose a fund now. There's so many choices. And to that I say, okay, well, you have to figure out what you're trying to do. If you're trying to make a fish dish on a Tuesday, don't flip to, the poultry section and start looking through there. Don't just, go through the, you got to find, okay, here's the fish section of the cookbook, and I'm going to go through and narrow down from there and do the work. The great thing about having more tools is you can build a portfolio that's more built to your specific needs. The downside, it might take you a little longer to find what you're doing, but...
And might there be some terrible recipes in that book that combine fish and cheese? Yeah.
Disagree.
Yeah, you love fish and cheese.
I will make you the most delicious blue cheese mussels you've ever had in your life, my man.
Okay.
I'm telling you.
Okay.
But that's for another day. Let's take a quick break. When we return, we've got the trivia answer and Wall Street Watch.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network. A trust isn't just a document. It's a powerful tool that can help protect your assets from the nursing home and even reduce or eliminate estate taxes. Cushing & Dolan are leaders in elder law, estate planning, and asset protection. This month, they're offering a free guide called Demystifying the Top 7 Estate Planning Trusts. This guide breaks down the most common types of trusts, explains the pros and cons of each, and helps you understand which might be right for you and your family. Trusts come with different rules, benefits, and tax treatment, and choosing the wrong one could cost you. Learning the differences now can help you make smarter decisions for your future and your loved ones. Trusts are a critical part of any well-designed estate plan, but they can be complex. Don't guess your way through it. Get the facts first. Call Cushing & Dolan now at 866-848-5699 to request your free copy, or visit LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The holidays are just around the corner, so now's the time to plan your winter escape. Trade in the cold for sunshine, sea breezes, and island vibes in the U.S. Virgin Islands.
America's Caribbean paradise. Whether it's a romantic retreat, a family celebration, or a solo recharge before the new year, St. Croix, St. Thomas, and St. John offer the ultimate warm weather getaway. Lounge on sun-drenched beaches, explore vibrant culture, and celebrate the holidays island style. No passport, no hassle, just warm weather, clear blue water, and unforgettable memories. This is where the stress melts away and you find yourself naturally in rhythm with the heartbeat of the islands. Go to visitusvi.com and book your trip today. That's visitusvi.com. The U.S. Virgin Islands, America's Caribbean paradise. Your holiday escape starts here at visitusvi.com.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we've got a guide available this month titled Leaving a Lasting Legacy. Mike, one of the things that people have to navigate now is figuring out which accounts to leave to different beneficiaries. As an example, if someone has two children, one in a high tax bracket, one in a low tax bracket, how does that potentially impact who receives which assets?
Well, let's call it out. First and foremost, most commonly, people just divide equally. Sure. And there's nothing wrong with that. I get the fairness argument with all of this. But taking your example here, let's imagine we have one person with an average effective tax rate of 10% and another one with 25%. Obviously, there's going to be a massive difference in terms of what is left over with a traditional IRA, for example, for that person in the 25% bracket versus the 10%. And so with the new rules over the last few years when it comes to requiring those accounts to be emptied over the course of 10 years in most cases, especially on the retirement account front, there's a lot of different stuff that can be looked at there. That doesn't even take into account things like non-retirement accounts, Chuck, right?
Sure.
So for those, you have a different set of rules that applies to those, generally pretty preferential tax treatment. And so you can be really intentional about how you leave the biggest legacy possible to your heirs as a whole.
Folks, the guide is titled Leaving a Lasting Legacy. The way to request it is by calling 800-393-4001. Again, the guide is called Leaving a Lasting Legacy, and the way to request it is by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, after a Fed-fueled rally on Friday, markets beginning the week mostly quiet as Wall Street awaits pivotal Nvidia earnings Wednesday after the close, in addition to an inflation reading on Friday with the core PCE index. Right now, the Dow is off by about 0.5% or 213 points. S&P 500 dipping by only 4 points. NASDAQ is up by 0.3% or 62 points higher. Russell 2000 is off by 0.4%. 10-year Treasury yield up 2 basis points, now at 4.283%. And crude oil up over 1.5% higher, trading at $64.66 a barrel. Breaking news this hour after Elon Musk accused Apple and OpenAI in a lawsuit of unfairly favoring the AI app across iPhones and thwarting competition for other chatbot makers. Apple stock is up modestly. Meanwhile, Keurig Dr. Pepper agreed to purchase the owner of Peet's Coffee, JDE Peet's, for $18 billion. Once the acquisition completes, the combined company is set to separate into two independent U.S.-listed coffee and beverage firms. Shares in Keurig Dr. Pepper sinking nearly 8%, while JDE Peet's stock is jumping 16%. Elsewhere, Intel stock up over 1% on the heels of confirmation that the U.S. government has taken a 10% stake in the struggling chip maker. Elsewhere, furniture stocks taking a hit following comments from President Trump that his administration would launch an investigation into imported units. Williams-Sonoma down over 2%, while RH and Wayfair tumbling by about 6%. And shares in American Eagle Outfitters pulling back 2% after Bank of America downgraded the stock to underperform. The bank's analysts noted that while the retailer's Sydney Sweeney ad campaign may boost sales near term, the momentum will be sapped by tariffs. I'm Tucker Silva, and that is Wall Street Watch. And in the previous segment, we asked you the trivia question: which member of the Golden Girls was a Marine during World War II? That would be Bo Arthur. She served with the Marine Corps from 1943 to her honorable discharge in 1945. Rick from Melrose, Mass. is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to Rick. And we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
All right, so the Center for Retirement Research at Boston College says that the average man retires at age 64, while the average woman retires at age 62. This despite a recent report from Empower, who polled about 1,000 adults, who said, hey, we'd like to retire at age 58. That's the ideal age for retirement. Quite honestly, missing by anywhere from like 4 to 6 years, I don't see as being that bad. Like that's pretty good, actually, if you're retiring, within 4 years of when you say you want to. I think that's pretty darn good, quite honestly.
Yeah. That's fair. I'm just trying to get to how. Right, that was the average. So most people that I meet, I would definitely say, have very little ability to retire at 58 years old. That seems very high, pie in the sky to me.
Well, it's interesting because keep in mind, there are a number of professions where you're forced out in your late 50s, early 60s. And that contributes to this as well, like how you get to that average. There are some where you're forced out even sooner than that, depending on, the specifics of your job and things like that. So I look at this, and what I always come back to is the math that you have to do in order to retire at 58. Because let's say that on average, you start working at 20. Some people start, in high school, after high school, in college. But let's say 20 to 22 is when most people start.
Sure.
If you're going to retire at 58, you're going to do 35, 36 years of work. You then, based on current life expectancies, are going to be retired for 25 to 27 years. That's pretty close to in balance, which means you need to be saving a lot more than 10 to 15% of your income to do so. Even accounting for things like compounding, you probably got to be saving 25 to 35% of your income for that to be feasible.
Or hit the lottery.
Listen, you got to spend money to make money is what they always say, but I don't think that's what they're talking about.
Yeah, this always comes back to something, too, which is 58, you got 7 years of health insurance to figure out. For most people. Again, you might work as a line worker for a utility company, in which case they might have that covered for you because you can't work till 65. You might work for the train system, in which case, they probably have that covered for you, or in the military, et cetera, et cetera.
A lot of people working for the train system these days?
I don't believe so.
Yeah.
But for most of us that work in the private sector, retiring at 58 would mean paying for private health insurance for you and your family for 7 years.
Which the going rate these days, depending on, exactly what kind of plan that you want. If you're, single, you're probably talking anywhere from like $7,000 to $15,000 a year. If you're married, you're probably talking $15,000 to $30,000 a year.
Yeah.
Big chunk of change.
Yeah, it is huge, huge money. Not completely undoable for some people, There are also plans that get subsidized by the federal government that some people can apply for and actually get regardless of net worth. But to Chuck's point, retiring that much before your Medicare age or full Social Security retirement age requires a ton of planning, like way in advance. And trying to do it at 52 might not be possible. But
you got to start planning for that around 30.
You do, or you have to get really fortunate in terms of your career and the direction that it goes and your ability to save. And maybe you are just that natural saver type. But again, retiring at 58, and sometimes you can't even touch that retirement account. If you are trying to make plans to retire before that full Social Security age of 67 or prior to that Medicare age of 65, I'm here to tell you, you need to plan early. If you want somebody to take a look with you at your plan and figure out how to achieve that goal, and then, back into what sort of lifestyle you're going to have if you do achieve that goal, give the folks at Armstrong Advisory Group a call. This is the type of stuff that we do every day. The number is 800-393-4001 for that consultation from the Armstrong Advisory Group. Once again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Piece in CNBC that has one of my least favorite words that's made its way into the English language. Auto giants forced to confront some hard truths in the age of polycrisis. Poly meaning many, crisis meaning crisis. And look, if we're going to just use that term, quite honestly,
like recession.
It's worse than that, because you can always claim that, like, oh, this is a crisis and that. No, like, when you get into the auto business, the hard truth that you have to accept is that the business that you've chosen sucks, at least to operate it. You can make some cool cars, you can have some fun doing it, but ultimately you are going to spend billions of dollars in CapEx trying to eke out, a few margin points here and there, and it's always hard, and then recession hits and it gets harder.
So let me ask you this question then. Do you believe that automakers are facing a uniquely large set of obstacles today compared to other times in the last 2 decades?
Yes, but it's of their own making. What I mean by that is that if you look at how automakers have decided to survive in the last couple of decades, it's by building bigger cars and trying to get more margin out of those vehicles.
Yep.
Hence the move over to SUVs, which, by the way, like, we love. I drive kind of a semi-SUV. Like, I'm a Subaru Outback guy myself,
Sure.
so, it's not really an SUV, and I'm just cool enough to be able to drive it, so that's nice. Love the functionality of SUVs. Like, they're great. I fully understand it. But ultimately, there's also a lot more stuff that goes into them, and that makes them more expensive to sell, which is why car makers like to sell them. But when the price of those inputs goes up, it becomes harder to maintain your cost structure. And so rather than saying, hey, costs are going up, we need to start making smaller and cheaper cars in order to deal with this and be able to sell more cars to more people, the answer has been, no, we're going to move in the opposite direction. This SUV now has a third row that's only fit for people age, 3 and under because there's no leg room. But hey, like, we've got to, sell the third row as, some kind of functionality. Mike's laughing at me because during the break I was talking about, like, do I need a third row in like, my future?
So I agree that piece was a crisis of their own making. I also would agree that the transition that all these automakers are needing to do, seemingly because of political pressure from one direction of we're all making EVs to now we're only making gas-powered vehicles, that is also a crisis of their own making.
Toyota didn't do it, and they were fine. Toyota's like, no, we're not going to respond to what we think is a fad, and they were completely right in doing so.
Other pieces, China's seeming subsidization of their auto industry and intentional dumping of cars onto other markets, as well as tariff policy.
Automakers did that to themselves too, specifically the Germans. The Germans, they have not resisted. People have been warning the Germans for years about what was coming, and they said, no, bring over the Chinese EVs, fine. And they're putting their own industry out of business in doing so.
And the only reason, to drive that point a little bit further, the only reason that those Chinese automakers have been able to modernize to the extent that they have been able to is because every foreign automaker in the world said, yeah, let's go into China and we'll share our IP with the Chinese government.
Correct.
So, okay. I was hesitant to agree at first, but I would agree. Crisis of their own making, but we will, if it gets bad enough, end up bailing them out because they're a national security concern. So will the Germans, so will the French, so will every other country that supplies an automaker in there.
Do you think, let me ask you this for real, though. Do you think there's appetite for auto bailouts if it came to that at this point?
Regardless of the appetite, I think it would. Yes, I do.
You think it would happen?
I think there would be political appetite for an auto bailout if it happened.
Interesting. Let's take a quick break. When we come back, it's time for Stack Roulette.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network. A trust isn't just a document. It's a powerful tool that can help protect your assets from the nursing home and even reduce or eliminate estate taxes. Cushing & Dolan are leaders in elder law, estate planning, and asset protection. This month, they're offering a free guide called Demystifying the Top 7 Estate Planning Trusts. This guide breaks down the most common types of trusts, explains the pros and cons of each, and helps you understand which might be right for you and your family. Trusts come with different rules, benefits, and tax treatment, and choosing the wrong one could cost you. Learning the differences now can help you make smarter decisions for your future and your loved ones. Trusts are a critical part of any well-designed estate plan, but they can be complex. Don't guess your way through it. Get the facts first. Call Cushing & Dolan now at 866-848-5699 to request your free copy, or visit legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck Zodda from the Armstrong Advisory Group. If you have an IRA, it's critical to understand the tax rules that may affect your family as you plan for retirement. Current law requires most non-spouse beneficiaries to withdraw the full balance of an inherited IRA within 10 years, which may lead to higher taxes and reduced value over time. If beneficiary designations are outdated or incorrect, they could possibly override your will and change how your assets are distributed. That's why we're offering a new guide called Leaving a Lasting Legacy, a resource to help you better understand inherited IRAs and other legacy planning topics that could affect your future. Make an informed choice and take control of your plan. Call 800-393-4001 and ask for your free guide today. That's 800-393-4001 or request your copy online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
The Financial Exchange is now available every day from 11 to noon on SiriusXM's Business Radio Channel 132. Stay informed about the latest from Wall Street, fiscal policy, and breaking business news every day. The Financial Exchange is live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange brought to you in part by the U.S. Virgin Islands Department of Tourism. 3 stunning islands, St. Croix, St. Thomas, and St. John, all just a quick flight away. No passport required, just sunshine, soft sand, and that warm island vibe. Craving a break? Well, plan your fall escape now and experience the beauty of America's Caribbean, the U.S. Virgin Islands. Book today at visitusvi.com. That's visitusvi.com.
Mike, what do you got for me for Stack Roulette?
Sleepovers is what I have for you for Stack Roulette. The Journal has a piece today about, well, they start off with a 11,000 square foot Newport Coast, California estate valued at $60 million in a case where it went for sale, and they reached an agreement to allow the potential buyers to rent it out for a couple months.
How many pools does it have? Do we know?
Not enough is the answer. And so at first I read this as completely irrelevant to 99.9% of Americans, but they actually went into a few cases where even on a $500,000 home that was for sale in Texas and elsewhere, where the seller, probably in some places where there is immense pressure to sell homes right now and not a whole lot of buyers for them, allowed for the potential buyer to come in and move in for a weekend and get a feel for the home, try out the AC, try out the plumbing, and really get a sense for actually living there, which I find interesting. I would absolutely want this as the buyer of a potential property. I would absolutely be terrified about it as the potential seller of a property. And my guess, my concerns about it and my guess is that it's not going to be done properly, and there's going to be instances popping up of homes that get damaged during a piece of time like this.
Of course.
And is there contractually anything set up for that? Squatters that end up moving in without any potential actual ability to buy the property. But I do just find it interesting, and it's not something you see in a seller's market. Let's put it that way.
No, exactly. Like the only way that you can do this is if you're the only person requesting it.
Right.
You're not
Right.
going to, as a seller, be like, okay, Jimmy, you get Monday.
Yeah.
Carol, you've got Tuesday.
Right.
And I need all bids in by the end of the week. It's you're not going to clean the sheets every night,
Yeah.
for a week.
Yeah, and it's one thing when it's a $60 million property and, the buyer has potential to lay down $250,000 a month in rent. Yeah, that's a different scenario. I'm talking about, the apartment in Somerville that's for sale, and do you let that person spend the night in it to get a feel for the neighborhood?
So here's the thing. I don't think as either a buyer or seller, I like the idea of staying in a home beforehand.
No? I get from the seller perspective. Give it to me from the buyer's perspective.
You can change anything in a house. You don't like the bed in that room, move it there. You don't like how the living room's arranged. Fine. You're going to change it anyways.
Yeah.
Ultimately, what I do think every prospective buyer should do is, if you're really serious about putting an offer in, spend a full day in that neighborhood before you do so. I'll give you an example. I was looking at a place several years ago, and I was like, wow, this is amazing. This is great. We'd been there for 20 minutes. As we got towards, the end of our tour around, all of a sudden start hearing some airplanes from inside the house pretty loudly. And I'm like, what's going on here? I go outside, and for the next 20 minutes or so, there is a parade of U.S. military cargo aircraft coming through the airspace about 2,000 feet overhead.
Yeah.
And as you know, like, military aircraft are a little bit louder than their civilian counterparts.
Yeah.
This is a nice place, but I don't think this is where we want to be. And I love planes. I mean, look, if I can't get on board with this, like, no one's going to, because ultimately I could be planes. I love watching planes, but I also like to be able to have control over when I do so. And every day from the backyard is just not what I wanted. Had I not spent a little bit more time there, I wouldn't have realized that. Other things. Hey, is there a lot of traffic that picks up at a certain time? Just as, and this is more in cities. I had someone I was talking to just the other day who was really close to putting an offer in at one point on a place in Boston. And it happened to be right near Fenway Park. And just by like a stroke of luck, as they were about to do this, they had to drive through at like 5 p.m. one day. And they were like, I'm not going to be able to get home 81 times a year because the Red Sox are playing.
Yeah.
Go Sox!
They decided not to. So,
do you remember the movie Seven with Morgan Freeman, Brad Pitt?
Yeah, what's in the box?
So that movie, they move into an apartment, and they mention in the movie that the realtor would only bring them by for like 15-minute visits because there was a train that went right by the door and shook the entire apartment for 10 minutes.
So I think you should spend a full day just so you get a sense of like what happens around the place during that day. Do you need to sleep in the house? No, like, I'll be honest, the first time I've ever moved to any new place, the first night sucked. You're uncomfortable. You're like, where am I? Why am I here? What am I doing? I've never had a good first night in a house. So maybe that's just me. But in any case, spend some time around what you're considering buying. Sleepovers? Not for me. Quick break for the entire rest of the day. We'll see you tomorrow.